Simon is the president. I'm going to take this seat. You can grab that one. Simon is the president. Is it president and CEO or just president?
Yeah, president and CEO, because I don't really know what president means either.
Okay. Except you weren't elected.
Exactly.
Okay. Okay. So, and CEO of REW in Canada.
Yeah.
So first of all, can you just give a bit of your background, because you've got quite a varied background coming out of South Africa and through Spain.
Yeah, sure. So I've I guess had a cross section of a whole lot of different types of real estate portal experience in the last 10, 12 years. Started in South Africa running a large platform there, kind of the domain to the South African REA, a big challenger platform, number 2 in the market, and did that for many years, kind of learned around how to run a classic portal business down in South Africa, and then moved to Spain with the Matula Group, and eventually merged with Trovit to form the Lifeful Connect Group, and oversaw platforms in different parts of the world, so emerging markets, mainly Southeast Asia, Latin America. Got to see how it's done in different parts of the world in the context of a global aggregator as well, which is a different kind of real estate marketplace and a different type of business model. And then most recently in North America, MLS-based market, very different kind of ecosystem of industry with sell-side agents, buy-side agents, supply aggregation sitting with an industry bureaucracy instead of with the private portal company, but having fun building out a regional leader with REW. Okay, so let's go a bit deeper into that. Describe the REW business. I know it's been around for, what, 10, 15 years? Yeah, so REW used to stand for Real Estate Weekly, so it actually was a paper publication 40 years ago. In fact, a couple of people in Vancouver still stop me and say, I used to deliver that to someone. But it transformed into a pure digital play about 10, 12 years ago, and is now the largest real estate portal in the west of Canada. If you think of Canada, Canada's like this interesting place, like this thin slice of the US, east to west. So not a very big population, but I mean, it's still not bad considering it's 35 million odd people, but spread across this large geographic range. And so I think of it in 3 big blocks: Western Canada, Ontario, and kind of English-speaking Eastern Canada with Toronto and Hamilton and Ottawa, and then Francophone Canada with Quebec City, Montreal, and Quebec itself. And so we're the regional leader out in the west of Canada. Okay, so now it's an MLS-based system, right? So how does that sort of differ and what sort of differences do you see that between the MLS-based environment, say the European approach, or I guess the rest of the world? Absolutely the biggest shift in paradigm for me, moving from this kind of single agent markets, whether it's Thailand or Colombia or Western Europe, it's all single agent markets, right? And so now you move to the North American context and you've got this industry-owned supply-side aggregator called the MLS, and that definitely changes the game when you're a real estate player. You are now only representing the demand aggregation. You're only representing the buyers in one platform. The content is ubiquitous. It's everywhere. Every little real estate agent has as many listings as you do. And so the MLS is definitely a disruptive element in how you build the business, and it's forcing us to be a lot more innovative about how we, I guess, leverage our leadership position with the home seekers to build a worthwhile and kind of lucrative revenue opportunity. We don't get as much. The MLS basically turns it into a freemium model. We get all of our listings, at least on the resale side of the business, for free from the MLS, but so does everybody else. And so our ability to charge kind of listing fees and pay to list is not nearly as easy to move into as portals in the rest of the world. So instead of a pay-through rate of maybe 70 to 90% of agents paying you, we've got a paid adoption of between 15 and 20% on the listing side of the business. And
what sort of products are they buying? What, that 15, 20% of the market, why are they paying you any money at all if their listings are already on the site? What benefit are they getting?
I guess fundamentally it's, I mean, we package it into membership tier and a bunch of different upgrade products, but fundamentally what they're buying is this opportunity to prefer themselves versus the rest of the agent market on a highly trafficked platform. So their listings get sorted up in the search results, they get better branding and reputation management offerings. In fact, most of the way we sell our membership is around agent reputation management as opposed to sell your listing quickly or market your listing to home seekers. Because the buy-side agents are the guys that are going to bring the deal to the listing agents anyway. So it's not about how quickly you sell your listing, it's almost seeing your listing as content to build your reputation as a great agent in a market to get more listings. So that's why they pay us on the listing side.
And the new development, because one thing that outside people know about Vancouver is it's just going up and up and up with new development every day.
Yeah.
How big is that segment for you?
Yeah, that is a really big segment for us. I think it could be a lot bigger, and that's where a lot of our focus in terms of innovation and investment is going, is to try and figure out models that allow us to tap into that primary new home market more effectively. But it is a big segment, and what's interesting about the segment is, unlike the resale market that's all in the MLS, it's not MLS driven at all. The realtors do participate in the process, but the listing content and the marketing is not done through the MLS. And so that gives us a whole different way to build, I guess, more of a classic listing and marketing model with new homes, and hopefully in the future plug on this transactional model as well, which is what we're looking at.
Okay, so you've got this structure where fighting for listings is irrelevant because you get all your listings coming basically for free from MLSs. You apply your freemium model to try to extract some value from the agency market, the secondary sales market. You've got developers galore in Canada who are very well funded, I assume,
yes,
and very hungry to move their development so they can build yet another skyscraper. So you're trying to extract value from them. Do you do anything in the rental market?
Yeah, so another oddity of being in an MLS-based market is, instead of being a full-service real estate portal, a lot of players will focus just on the MLS content because, as you said, it's pretty easy to get. You know, maybe you do some data and you augment it in a great user experience, and you build a business, and you forget about the rest of the real estate ecosystem. So rentals are a big part of our business, but we only started our rental listing business about 2 years ago. When I joined the business, it was like, how can we not have rentals alongside new home listings, alongside MLS listings? And so we've really tried to enrich the full offering. But yeah, it's still, rentals are even more fragmented than sales. You've got a lot of different platforms that have rentals. You've got some entrants from the US, which is a big story in Canada. You know, the proximity to the US means all the US market options are available in Canada as well. And then you've got Craigslist, you know, which is like the big old grandfather of classifieds that still carves out a good rental business there. In
Vancouver?
Yeah.
And so is it still as ugly as it's ever been, with just literally text-based?
No, I mean, they've got an ugly map too. No, I mean, they've definitely invested a bit in verticalization around certain category types, and rentals is one of those. And it's a utility.
Is that a classic case of just brand being so embedded in everyone's psyche that they just go to Craigslist, right?
Yeah, absolutely. Yeah, I think you see some of these cultures, like having experienced different markets, you see their propensity to adopt different systems or innovations. And Canada is definitely on the more parochial side sometimes, where it's like, if it's something I know, if it's something I've used before, I'm going to keep using it. And so first mover advantage in that market is definitely a big deal, which helps us a lot on the west of Canada, because we're the established name and the established player. But as we expand eastward, we definitely confront that. It's like, oh yeah, but I used this platform 10 years ago and I'm going to keep using it. So, yeah.
Okay, before we get on to challenges of growth, because then we want to get on to what are you going to do next to grow your business and how you think about it. Can we just put up the questions, please, so that people can once again, use the Wahova app. If you're not sure, use the Hoover app, however you pronounce it. Go down the bottom, click agenda, click on the session you're on, and then there's the Q&A functionality, and just ask your questions. And you can participate in the conversation. So you walked into this business it was about 2 years ago now, right?
Yes.
You went there? I think it was just pre-COVID.
Yeah. Yeah, just before the world changed.
Okay.
Yeah.
And you've got sort of an infrastructure that's hard to change, right? And when we look at businesses like Zillow and Move.com, et cetera, in the US, they all seem to struggle to find growth in that core advertising business that in other markets it seems to be a lot easier. So are they the same challenges you have?
Yeah, it's sometimes difficult to differentiate between our business and some of the offerings that Zillow might bring to market, and it's specifically for that reason of how the industry is set up. It is difficult to find growth in the pure classified portal model around listing advertising and upsell services because it is freemium. Even if an agent stops paying you, their content's still going to be there, and they're still going to get access to your home seekers audience. So it's that part is quite difficult, but it forces innovation. And there are other opportunities that are quite exciting. I think the fact that it is split between listing agent and buy-side agent means that the platforms are increasingly, including ourselves, moving into the buy side of that transaction. We have an easy way to partner with buyers agents who are kind of content agnostic to drive transaction revenues. And it starts off with kind of share of voice advertising style products. We'll connect you with buyers in local markets if you sponsor this local market and you're part of a panel. And then that transitions to lead-based introductions and transitions ultimately, we hope, to commission-based introductions.
So when we look at the conversations yesterday around transactions, and we look, the various segments you can go into. You can go into the primary market, secondary market, rental market, and so on. How do you think about all these potential growth options? And especially given the uniqueness of the MLS and how that changes the dynamics in the market?
Yeah, I think that's a great question. I mean, I think I've tended to stay at the surface level of, it's a real estate marketplace and we want to try and extract value from the real estate ecosystem that we're in. But then when you go a level deeper, which we're being forced to do in our market, you kind of explode that out into a number of different opportunities. So you've got the resale buy-side commission opportunity, and that I think is very distinct and very different from the portal media advertising model. Do you
want to explain that a bit more carefully about what you mean by the buy-side commission opportunity?
Sure. So in a normal transaction, I bought a place a year ago. I will have a buyer's agent represent me. It's a little bit like my lawyer, your lawyer, but I'll have a buy-side agent. In all of the real estate properties I look at, I'll have the same buy-side agent. And in all of the listings are represented by the sell-side agent. And my buy-side agent and sell-side agent are going to negotiate the deal on behalf of their clients. And both of them are going to share in the 5% commission that exists within the Canadian market. And I mean, that's why I think you see North American real estate commissions stay so much higher than the rest of the world. So they sit at 5 and 6% because there are two agents in every transaction. And each of those agents, wants to protect their side of the deal. So it hasn't declined to what you see in Europe or Australia, where it's like sub 2% sometimes.
Mm-hmm.
But yeah, because of that dynamic, the buy-side agent is looking for buyers, and they're doing that kind of free from any listings. And so if we're on the platform presenting listings to the market, we have the ability to take unattached buyers that don't have their friend as their realtor or their brother's uncle as their realtor, and introduce them to the best realtors in the market so that they can close the deal with them. And so that business is, if we just look at BC, which is our primary market in the west of Canada, that's probably about a $5 billion commission pool. You're talking average sales values of about $1 million each. 5% commission, and that's split between the buy side and sell side agent. So we can access quite a big commission pool if we focus it.
So even just focusing on the buy side, you're going after $2.5 billion worth of value.
Yes, yes.
And what's the marketing revenue?
Oh, maybe a tenth of that, $250 million.
Right, so it's either you go fish, you keep trying to fish in and with your freemium models and so on in the 200 odd million pool, or you're going after 2.5 billion. How do you do that in a way that doesn't piss off your customers, right? Or piss off the agents in the market? Or do you care because you can get the listings for free from the MLS anyway?
Well, that's it. In fact, a lot of our competitors are not portals. We consider our competitors the tech-enabled brokerages, the guys that have an aggregation of agents that have a great web experience or app experience that's driving a consumer behavior that's similar to a portal experience. Those are our competitors for that same reason. It's like they're going to get the same content access that we do, regardless of their activity in the transaction. So no, we don't care that much. I think it's more operationally how you try and run both of those types of businesses. And so it was really interesting listening to some of the speakers yesterday talk about the core business of portals versus the transaction opportunity and how you actually leverage the transaction opportunity without foregoing the core opportunity. That's what we wrestle with every day. How to run a successful portal media business that is kind of open and broad-based enough to build advertiser revenue, and at the same time create an exclusive matching service for in-market, ready-to-transact buyers. And that balancing act is tricky.
Now, we saw yesterday in a presentation by, I think it was Artem, about their verification of buyers as well as listings and so on. Clearly, with an MLS, all the verification is done for you. But from the buy side, how do you think about getting more data about a buyer to work out whether it's a real buyer and a hot buyer or a tire kicker, someone who's just sort of interested in having a little look? Especially given in Vancouver or Canada, real estate is one of the national pastimes.
Totally. It's like a big game sport out there. Everybody wants to be in real estate or is in real estate as an investor or as an owner. They talk about the weather and real estate. So, yeah, the way that we do it is actually, at the moment, we're kind of on both ends of the spectrum, and it's a bit tricky. On the one side, we've got the portal media business, and it's about lead generation, and there's not a whole lot of profiling and scoring that's going on there, not yet anyway. And then on the other end of the business, we've got the mortgage services business. So we've got REW Money, and that provides mortgage brokerage services to buyers in the transaction journey. And on that side, we know almost everything there is to know about that buyer because we're their consultant and their advisor in that process. All the financial detail, and we're negotiating on their behalf with lenders, and so it's a very deep understanding of the buyer. But what we need to do is really focus on building the in-between, a level of fidelity about the needs of that buyer without having to have had a couple of 20, 30-minute conversations, a whole lot of online forms to build information about them.
So if you build deep knowledge about a buyer and you can do the scoring, same concept that Artem was talking yesterday or Constantine brought up or so on, right? And that seems to be a theme here, is about really understanding who is doing what on your platform. I think that's probably, if you think of one of the themes coming out of this conference so far is we run platforms, people come visit the platform, they generate a lead, it pops out the other side. We don't really do much with it, okay, in that category, and then we send it to someone who also may not do much with it, right? And we were having a bit of a reflection yesterday, I can't remember who I was chatting to now, about we sort of look at agents as being a little bit, they don't squeeze the lemon, they don't really get everything out of those leads. In fact, we heard from the iVox guys about lots of leads not being actioned. But you could argue the same for portals, right?
Oh,
we don't actually maximise the value that's sitting in there. We're just sort of capturing that easy bit off the top. So if you understand more about your buyers, can you become the buyer's agent? Can you get that 2.5% or 3% or whatever it is?
Absolutely. There's a question about whether, if you move all the way to being the buyer's agent, whether you lose something in being the independent marketplace that kind of stewards the entire real estate environment. And so that one, I don't know whether that's a worthwhile trade-off to make, but at least conceptually it makes sense to be the buy-side agent completely in the transaction. But that transition that you just described, from moving from a kind of audience-centric mindset to a profile or relationship mindset around buyers, I think that's a really big shift that sometimes we gloss over. Ultimately, it just is profiles with more data attached to those individuals and how they interact. But the shift is pretty significant. It's now this idea that we're going to have a partnering style relationship with as many people as we can at the right stage in their real estate transaction. That's very different to, we just want to own all of the eyeballs that are interested in real estate in the next 6 to 9 months. Yeah, so that one is the thing that we're going through right now. It's a little difficult to navigate.
And I think what was another interesting reflection from another conversation last night, it might have been the same one, was if you look at who's coming into the industry nowadays, a lot of people are coming from the travel industry, where you need to understand deep levels of understanding around that buyer and what they want, so you can put the right proposition in front of them at the right time. So I think that's going to help transform the industry to a far more data-driven, analytical-driven approach. How do you think about, if you can go into the transaction on the buy side, so buyer's leads, which is very different from seller's leads that we were talking about yesterday, what about the primary transaction? Can you play a role there with developers and capture that commission as well?
Yeah, that's probably the most exciting space for us, even though the commission pool is not as big as the resale side. I mean, we're talking about 2.5 billion, 50% of the resale side. In new homes, it's probably somewhere more like 600 to 800 million in new home commissions just in BC every year. So it's a big enough pie, but it's a fair bit smaller than the resale. But the opportunity to play there is a lot more interesting for us, because that content, first and foremost, is not on the MLS. That content is in the hands of maybe 20, 30 large development companies. And so good relationships with them that we built over the years gives us greater access to that content. But I think there's also an emerging space that's just fun to play in, which is creating original content around this new home space. So I don't know what it's like in some other developed markets, but certainly in Canada there's a huge conversation going on around housing affordability and housing supply, the lack of supply and the crazy impact that it's having on affordability. And so it's almost like you're part of the zeitgeist if you can start having that conversation with home seekers. If you can represent the whole new home space to them, like not just what the current real estate market looks like, but what the future real estate market looks like 5 years out, 10 years out, and how they can participate in that. And so what we've done is stood up a studio team that produces original content. It's a little bit like you see the car platforms doing with all their car reviews and things like that. But yeah, to answer your point, new homes I think is a great sector for innovating the nature of the content that you put out as a real estate platform, the type of relationship you have with consumers around that content, and ultimately moving into the advisory commission earning part of it.
A couple of questions come up I think are quite relevant to this. One is, how do you move into new geographic areas? Do you go city by city? What do you do to win a new territory? But I would ask the question is, do you want to?
Yeah, so that's a great question. We've got these two axes when you think about growth. The one which we've been talking a lot about is this idea of depth, trying to understand what is the market opportunity in each of these different parts of the real estate ecosystem, and what can we do in each of them. And that is pretty much what we're committed to from a growth strategy point of view. And then there's also the kind of horizontal axes of how many cities or regions do we do this in. And obviously we've got opportunity to grow east in Canada and potentially even south into the US on a city-by-city basis, because that same ecosystem of get the listings from the MLS, build relationships with suppliers, exists in the US. But no, to answer your question, focusing very much on building out this full stack marketplace, the ultimate guide for your real estate adventure. And once we have that working and functioning well within our core market, then look to move that and expand that. And if we think about expansion, it probably looks like 2 years ahead of going to the city, you kind of plant the organic flag in the ground. You know, get the MLS content, start building the consumer experience, start having home seekers see your platform, and then wherever the growth is starting to light up, and that's what we've done with some of the cities, is where it starts to look like it's working, push harder and move into that market.
Yeah, I think from an outside-in perspective, you'd say, is it worth the investment to go to Toronto? I assume if you keep going.
Yeah,
east,
they're the jewel in the crown.
right?
If you're looking at the Canadian context, there's certainly a lot of real estate there.
Or do I start to get really smart and fish in that pool of buy-side, there's even rentals, there's so on. There's got to be billions of value on your doorstep, and you're sitting there with a brand,
Yeah.
people who are already visiting you,
Yes.
being a market leader, and relationships. It would seem a lot easier to get the fishing rods out on your deck and just go fishing versus going...
I completely agree with you. I think there's that element, but then there's also the brand element that you just raised. And I think people, if you look at those real estate portal valuations and why they look like what they look like, at least one of my hypothesis around why they are still valuable businesses, even as the classified business model really matures, it's because of the brand. And that brand with home seekers and that brand with consumers, if you think of the real estate market, the real estate economy, most of the brands that consumers are interacting with are dying brands. The real estate agency brands of 30, 40, 50 years ago are still the brands where the agents are kind of concentrated, and no one, at least at a home seeker level, cares about those brands, whereas the portal, and ours included, feels like one of the brands that are ascending, that are kind of representative of what the home seekers want and need. And I think that gives you a lot of power and opportunity to explore these different models in the regions where you have that brand recognition. Certainly the challenge we have in some of our newer markets is that we don't have that same brand recognition. And then your value offering, even if it's good, is seen in the same light as perhaps some of the other guys.
Yeah, I think the way I think about it is the traditional portal model was I have to be everywhere and I have to have a brand that's dominant. I've got to aggregate all the listings and I'm trying to capture a whole lot of revenue that's quite high yielding. Transaction businesses, I mean, I just have to, if I can just nail Vancouver or British Columbia, I would assume, and I get 5% of the market. I don't have to be the dominant player, I can just get 5% of the market. So what's that, 250 million in commissions. I'm doing a pretty good business. And if
Absolutely.
I can drive that profitably, it becomes a very attractive business.
I completely agree with that, and I think if you can do that and maintain that credibility as an independent marketplace for all of real estate, then you've got a really powerful brand proposition into the future. You know, transactional revenues that are like driving the reinvestment in the business, and a brand that people still trust. You know, you're not one of the players in the industry, you represent this real estate industry to me. And I think if you can get that balance right, then it's very exciting. At least that's what we're trying to do.
Fantastic. Thank you, Simon. It's great to hear what you're trying to do in British Columbia.
Brilliant. Thank you.
Fantastic. Thank you.